Welcome to the deep dive. Today, we're looking into some potential tax changes, ideas that were floated before the last spring statement, and, well, they might just reappear for the autumn budget 2025.
That's right. We're digging into a report, actually from my pensions advisor, which pointed to a Daily Telegraph piece about this supposed secret memo. Angela Rayner to Rachel Reeves, apparently.
A secret memo. Sounds intriguing.
Doesn't it?
Yeah.
The idea was looking at tax increases perhaps as an alternative to, benefit cuts. So our aim here is really to unpack what was suggested, the potential impact, and, well, what it tells us about future policy thinking.
Okay, let's get into it. What specific tax hikes were actually in this memo?
Well, there were several key ideas. First off, a 2% increase in the corporation tax surcharge, specifically aimed at banks.
Just banks.
Yeah, just banks. The estimate was maybe 500 million to 700 million gallons a year from that. And you might ask why single them out.
Profitable sector, maybe?
But
Or competitiveness issues?
could be either or both. Definitely something to consider. Then there was a pretty big one, removing all inheritance tax business relief for AIM shares.
AIM shares. So the alternative investment market, what kind of money are we talking there?
Potentially quite a lot. The estimates varied wildly, actually from 100 million up to maybe even 1 billion.
Wow, that's a huge range. Raises questions about supporting smaller company investment versus IHT revenue, doesn't it?
It certainly does. Balancing act. They also talked about scrapping the 500-pound dividend allowance.
Okay, how much would that bring in?
Around 325 million, the estimate suggests.
Right.
But the report did flag that it could mean a lot more admin work.
Ah, the practicalities. Always a factor.
Yep. And you have to weigh that revenue against the extra burden. Another idea was freezing the additional rate threshold for income tax.
Right, the 45p rate threshold. So not a new tax, but freezing it means more people get dragged into it over time. Fiscal drag.
Exactly. No specific value given for that one, but it's a known mechanism. Then there were property-related things.
Okay, like what?
An increase in AIDed, that's the annual tax on enveloped dwellings, high-value homes and company wrappers, potentially 100 pounds to 200 million there.
Right.
And more significantly, perhaps, closing a stamp duty loophole on commercial property.
Tell me more about that loophole.
Well, currently, if UK commercial property is held in, say, an offshore company, you can sell the company's shares instead of the property itself.
Ah, avoiding stamp duty land tax. Clever.
And potentially costly for the exchequer. Closing that could yield up to 1 billion, apparently.
$1 billion. That's serious money. Anything else major?
Just a couple more points mentioned. Bringing dividend tax rates closer to income tax rates, no figures on that, though. And reinstating the pension lifetime allowance at its old level.
And the lifetime allowance, that was scrapped recently. Bringing it back.
The memo apparently suggested it. The projected yield was around 800 million a year.
Okay, so let's tally this up. If you add all these potential changes together, what are we looking at?
Roughly. And it is the total potential revenue comes out at around 4 billion per year.
4 billion. How does that compare, say, to the last autumn budget?
Well, put it this way. It's only about a tenth of the revenue Rachel Reeves raised in autumn 2024. Or, another way to think about it, it's like adding half a penny to the basic rate of income tax.
Only a tenth. That puts it into perspective. So, given the tricky economic outlook, how likely is it these ideas might actually make a comeback in autumn 2025, especially with that spending review due soon?
It's definitely possible. The spending review on June 11th, well, it's expected to be tough. Real terms cuts for unprotected departments seem likely.
So the pressure's on to find money elsewhere.
Exactly. That kind of squeeze could make these sorts of tax proposals look, well, more appealing, perhaps.
Can you give an example of that spending pressure?
Sure. The report mentioned the winter fuel allowance. If they wanted to, say, partially unwind the recent means testing restrictions, that could cost over £1 billion a year.
Right. And the means testing was meant to save about $1.5 billion next year.
Precisely. So you see the direct trade-off, spending needs versus finding the revenue. These memo ideas represent one potential pot of revenue.
So to recap, we've got potential changes to bank taxes, IHT relief, dividend allowances, property taxes, the LTA. Quite a list, potentially adding up to 4 billion pounds.
That's the sum of it. And look, we obviously don't know if any of these will actually happen in autumn 2025. It's all speculation based on this reported memo.
But the context matters. Economic pressure, the spending review. It means these kinds of options are likely being, dusted off and looked at again.
Very likely.
So As you're listening, it's worth thinking about how these shifts, even if they seem small individually, can add up, how they might change the economic landscape for businesses, for individuals. Maybe ask yourself, what priorities do these potential changes point towards? Something to mull over. Thanks for joining us for this deep dive.